Okay, let's talk about the year 2026. The forecast is for a slowing economy. And there's this powerful force it's squeezing the middle class from both sides. So, what does this actually mean for you, for your wallet? Let's break down this coming economic squeeze.
It's the big question that seems to be at the heart of so much economic anxiety these days. Is the middle class actually disappearing? The data is pointing to a really fundamental shift in our economy. And today, we're going to dig into what that really means. All right, so here's our game plan. We're going to start with the big idea, this thing called the hourglass economy. Then we'll zoom in on the 2026 outlook and how that squeeze affects your wallet. We'll also take a look at some policy pains before we peek at what could happen next. First things first, before we get into the numbers, let's get a handle on the core concept that's really driving this whole trend, the hourglass economy.
So, what is an hourglass economy? Well, the name is actually a perfect description. It's an economy where wealth and opportunity are increasingly collecting at the very top and at the very bottom, while that middle section just gets thinner and thinner. Seriously, picture sand in an hourglass, just emptying out from the center.
And this right here, this is what that hourglass shape feels like for real people. The middle class squeeze is what happens on the ground. Your paycheck might be going up, which sounds great, right? But if the cost of housing, groceries, healthcare, everything is going up faster, then your actual ability to buy things, your purchasing power, is actually going down.
Okay, so with those two big ideas in our back pocket, what does the big picture actually look like for 2026? Let's take a look. So, Morgan Stanley's forecast is pointing to a pretty significant cooldown. Weaker GDP growth means the whole economy is just expanding more slowly. A rising unemployment rate and slower job growth mean finding a job could get a bit tougher. Now, there is a silver lining here. Inflation is expected to calm down a bit, which could offer some much-needed relief on prices. This quote from the Morgan Stanley report really sums it all up, doesn't it? They're basically saying, look, expect a bit of a rough start to the year, with slower growth and a softer job market. But the hope is that as some of these policy shocks wear off, the economy might just find its footing again later in 2026. So let's get to the tightest point of that hourglass. We're moving from the big picture economy to the direct, real-world impact on your household finances. This is where it really hits home. This is exactly what the squeeze looks like in real life. According to an analysis from KFF, millions of people could be facing a double whammy. Just take healthcare, for example. At the exact same time costs are going up, the financial assistance that helps people pay for their insurance could just disappear. You're getting squeezed from both sides.
And the numbers, they are absolutely staggering. If these enhanced ACA tax credits expire, the average person's health insurance premium payments are projected to jump by 114%. Let that sink in. That's more than double what they're paying now.
And to put that into real dollars, what does that actually mean? It means the average person getting those subsidies would lose about $1,016 in annual savings. That is a significant hit to any family's budget. That's money that has to come from somewhere else. Now, this squeeze isn't happening in a vacuum. Morgan Stanley's report points out that we are in what they call a K-shaped economy. And that's just a perfect visual. It's a situation where different parts of the economy are recovering at wildly different rates. Some folks are on the top arm of that K, heading straight up, while a whole lot of others are on the bottom arm, heading down. And this chart, wow, this just lays it all bare. The top 20% of households control 71% of the entire country's net wealth. Now look at the other end, the bottom 60% of the population. That's more than half of us. They hold a combined total of just 15%. This is the K-shape in action. You see that upward arm for a few, while many, many others are being left behind. Okay, so beyond these huge economic trends, it's also really important to understand that specific policy decisions can add even more pressure. They can actually compound the squeeze. Yeah, government policy can be a huge factor here. For instance, some countries have seen new policies pop up that really add to the burden. We're talking about things like higher taxes on stock trading, or new taxes on other assets, or even the removal of deductions people have counted on for years. Each one by itself might seem small, but when you add them all up, it can feel like a death by a thousand cuts to a household's finances. All right, so let's widen that hourglass again. Remember, the future isn't set in stone. So what are the potential paths the economy could actually take from here?
So, what could happen? Well, Morgan Stanley maps out a few different possibilities. On one hand, you've got the optimistic scenario, which they give about a 25% chance. This is where maybe a boom in AI productivity or consumer demand leads to a stronger economy, more jobs, the whole shebang. But then there's also a 15% chance of a mild recession, where growth actually goes negative and more people lose their jobs. So you see, the future isn't written, but the range of outcomes is pretty darn wide.
So, in the end, while all the economists can debate the exact numbers, the trend itself is clear. The squeeze on the middle class is coming from all sides: wages that aren't keeping up, rising costs, and specific policy choices. And while the outlook for 2026 isn't a done deal, it really forces us to ask a critical and maybe uncomfortable question. What happens when the middle of the hourglass simply runs out of room?